In April of 2025, Liberation Day sent the markets into a panic.
Pretty decisively negative here at the open.
Yeah.
Everything across the board was free falling. And myself, like many investors, seriously considered selling. I didn't though. Now I want to walk you exactly through what stopped me. Because this mistake isn't rare at all. It's actually quite common. And it's a mistake all of us will be tempted with again at some point. So let's go back to April 2nd, 2025. Tariffs get announced, and they're bigger and broader than anyone expected. The markets did not take that well. Within a week, the S&P 500 was down 12%. The Nasdaq Composite was down a whopping 20%. Not over a few weeks, over a few days. I remember opening my portfolio and seeing a sea of red. Every position, every sector, everything. And honestly, in that moment, selling it all didn't feel reckless at all. It actually felt like the responsible thing to do. And that's why this mistake's so easy to fall into. I remember thinking, is this part of a bigger sell-off? Are tariffs going to continue? Could we be going into a bigger multi-year recession? It seems very reasonable. I'm going to get out now and get back in later, maybe even at a lower price point. It sounds reasonable, but it's honestly one of the most dangerous ideas in all of investing because you have to be right when you sell and you also have to be right when you buy back in. And doing both of those is very difficult. So here's what actually happened next, and the part that should stick with you. A little over a week later, a 90-day pause is initiated, and the market didn't just recover. It exploded over the course of one day. The S&P rallied 9.5% in one day, one of the single largest intraday rallies in the history of the index. And over the course of the next month, the S&P gradually climbed back and acted as if nothing had happened at all. And I haven't even shown you the worst part. Now, if you've watched my channel before, you'll know that I'm a big technology bull. And I had most of my individual ETF holdings in the Vanguard Information Technology Index. From peak to trough, it actually went down around 25%. For my portfolio at the time, that was over $100,000. And yeah, it kind of hurt. Had I sold anywhere near the bottom and missed that single day rally, I would have locked in over $100,000 worth of losses. Had I tried to sell and time the market to get back in, there's no way I could have predicted that the administration would have announced that 90-day pause. That's why trying to time the market is so dangerous. A study from Fidelity shows that if you'd missed the top 10 trading days over a 30-year period, you would lose half of your gains. April 9th included. If you had missed that 10% rally intraday, that would have significantly decreased your returns over the next 10 years. Because compound interest is just that. It's compounded. Little mistakes add up big over several years. So what did I do instead? Actually, I didn't change my investing philosophy at all. I continued to dollar cost average into the index. And I want to be clear that sometimes doing nothing at all is the hardest thing you can do. It doesn't feel engaging. You're doing nothing. You don't really feel like you're making any progress at all. Just waking up day after day, seeing red across the board in your portfolio. It's a hard thing to do. Looking at the market today and looking at some of the high flying technology single stocks, I worry that a lot of investors aren't 100% sure exactly what they're buying. One reason I was able to weather the storm so well, even though seeing my portfolio drop by six figures, is the fact that I know everything in the Vanguard information technology sector, and I'm comfortable holding it. And that's why it's my single largest holding. I truly believe, deep down, in the future of technology and artificial intelligence. I always have to remind myself that throughout human history, technology has always been at the forefront, whether that's the printing press or even the plow. These inventions, they were the cutting edge tech of the day, just like artificial intelligence is today. And I tend to be a perma bull because I'm just so excited to see what the future holds. So for me, sleeping well at night, even knowing that on paper I'd lost 25% in my single largest ETF holding, I was okay with that because I believed in the future. Had I been invested in a bunch of single stocks that I really didn't understand the business model of, that may not have been an easy feat to accomplish. So the true lesson here is bigger than any one event. The mistake isn't failing to predict the crash, because let's be honest, nobody can do that. I don't have a crystal ball. And if I did, I promise you, I'd be filming in front of my Ferrari right now. And nobody predicts these drops perfectly, including people on the financial news telling you that we're in the next bear market. The mistake is letting one terrifying week derail your entire investing philosophy and ruin the next 10 to 20 years. I've given myself one simple rule going forward. If we're in a major moment of panic or a major sell off, I want to give myself 1 week. And in that week, I want to see if my thesis has changed. If technology is really not the future, and for me, that week's long enough to not let fear take hold. And another thing that I think helped me weather the storm more than if it wasn't in place is during this sell off, I actually had a very large cash position. I knew that if this turned into a prolonged bear market, I had plenty of dry powder waiting on the sidelines that I could use to buy the dip. And when we did get on the other side of it, I knew that I'd have even more shares of my favorite ETFs. And if we made it back to all time highs, I would have significantly more money than if the correction had not happened at all. So that's the $100,000 mistake I almost made. Not picking a bad investment, not being wrong about the market, just not letting a week of fear dictate the next 10 years. Were you invested during Liberation Day? Did you buy the dip? Did you sell? And let me know in the comments below. Hit that subscribe button because I break down scenarios like this regularly on this channel.